So I wanted to come on live today and talk about what the Fed has recently said about mortgage rates. Well, not said, but um, well, kind of. Okay. So what brought me to even start making this video is I've been getting a lot of messages and DMs lately about what the Fed has currently said about mortgage um, interest rates and what that could mean for them. A lot of people have been asking me if mortgage rates are going to go up based on the decisions of the Fed. So I just wanted to come on here and make a quick video and just talk to you guys about that because I know that a lot of people may have these questions besides just the people that are reaching out to me, and a lot of people don't understand what they read. An article was recently published that touched on it, and I will once this live is over, I'm going to link the article below so you can read it for yourself. But this is my interpretation of what the article is saying. Okay, so the feds basic or not the feds, not the feds, the federal the the Fed basically is saying that they are not ready to aggressively lower rates. Now, does that mean that interest rates are going to go up? It's not really that simple because mortgage interest rates aren't solely dependent on what the Fed decides to do. So the Fed's job is to stabilize the economy, make sure that the economy is stable, and rates are not going too high, like inflation is not going up too quickly. And just because that the inflation has not gone down, I think since 2022, the Fed and the economy is still strong. The Fed does not want to lower rates right now. So yeah, does that mean mortgage rates will go up? Not necessarily, because mortgage rates are dependent on not what the Fed is, the decisions of the Fed, but it's dependent on the bond market and investors. So the way that I understand it is the government bond would have to yield lower than the housing market interest. So the government bond is a safer bet for investors. So let's say the government bond, and I'm just throwing a number out, I don't know what it is right now, but let's say the government bond yields about 5% for investors, but the housing market is yielding 4% for investors. Well, if you are an investor and let's say you had $1 million to invest, would you rather invest in something that you are sure that you are going to get that ROI for, or would you invest in something that's kind of risky? Which the housing market is risky because what happens if people lose their jobs and they're not able to pay the mortgage anymore, whereas the government bond, you are sure that you are going to get that back. So if the housing market is not yielding enough return for investors, they're not going to want to invest. So in order to compete with the government bond, they have to make sure that the housing market is yielding at least a little bit more than the government bonds. And for them to do that, they have to raise the interest rates to make sure that they are able to compete with government bond and have investors invest in the housing market. Okay, so the Feds are not saying that rates are going to increase, but they're also not in a hurry to decrease the rates right now, because they're trying to stabilize the economy. Okay, so shoot, I kind of lost my train of thought there, but yeah, so investors are and government bonds are really what drives the interest rates for mortgages. So the investors have to be confident in the housing market in order for them to want to invest. So the lower the government bond is, the interest, the return for the investors, the lower that it is, then the housing market will, start to decrease. So my thing is, when I like I said, I've been getting the questions all week. Well, since the article dropped about whether mortgage rates are going to go up based on the Fed not wanting to decrease the rates right now. And my thing is, if you are a buyer, if you're planning to buy or you would like to buy within the next few years, couple years, or within the year, what I want you to think about is, what will you do if interest rates don't go down? What will you do if interest rates continue to go up? If you're planning on buying, these are things that you have to think about, because everyone wants interest rates to go down. And a lot of people are waiting for interest rates to go down. So that's another thing that I was talking to one of my clients, my customers, about recently, is what are you going to do when interest rates, if I'm not going to say when because I don't know, but what are you going to do if interest rates do go down and now there's like competition? Because a lot of people are waiting for interest rates to go down. So once they go down, that's going to create a lot of competition in the market. So what does that mean when there's a lot of competition in the market? That means that the pricing of houses are going to go up. So theoretically speaking, let's say that interest rates are what it is right now, and there's a house on the market for $450,000 right now. And let's say interest rates go down tomorrow, or let's say next week, right? Now the prices of housings are going to go up. Not only is it going to go up, but that's also going to create it's going to create a bidding war. So that same house that was at $450,000, because interest rates have gone down and more people are now in the market, they're going to raise their prices. Now that $450,000 house is $490,000 or $500,000. And not only will it probably get sold at that price because interest rates have gone down, but it'll also open up bidding wars. So even though it's listed at 490 or whatever it's listed at, because there will be multiple people interested in that property, because interest rates have gone down. Now you're looking at that house might sell for 550, 560. So that's something that I always encourage my buyers to think about when they are thinking about waiting until interest rates go down. Because yes, we all want interest rates to go down because it will be better for the housing market. We can get more people into homes, but also remember that with interest rates decreasing, is going to increase competition. More people are going to be in the market, which means that there will be bidding wars for these houses. So that's something to think about. And if you are a seller or you're considering on selling your home but not sure because of how high interest rates are, and in Florida overall, well, not Florida, but South Florida in particular, Broward, Palm Beach, and Miami, it is a buyer's market overall. So it can be a little concerning with wanting to put your house on the market, but also wanting to make sure that you get an ROI, because your house or you want to get like the highest amount that you can for it, because it's a buyer's market right now, right? But the thing is, your house can still sell even though rates are high. It all depends on whether or not you price your home correctly and if it's being marketed well. So those are the two main things that I see, where either if when a house sits on the market for 100+ days, it's either priced too high for the area, that the neighborhood that it's in, or it's not being marketed. So as long as you're priced correctly and your house is being marketed, there should be no reason why your house shouldn't sell, because it, even though it is a buyer's market, that means that there are people out there active looking. So your house still has the ability to sell. Okay, so now if you're wondering whether now is the right time to either buy or sell, you can click the link. I have a link in my, I don't know if YouTube, if it's called a bio on YouTube, I have no clue, but I have a link in my bio or whatever it's called. It's my link tree. You can either click on it and fill out, I have a form on there that you can fill out. You can fill it out, or you can click on my Instagram and send me a DM there. But yeah, I really just wanted to come on and just kind of break down what's been going on with the Fed, the article that recently came out right now, because I've been getting a lot of questions on it, and I just wanted to give my take on it and kind of explain it to you guys in a way that you can understand it, because it is important to understand what is going on. And also mortgage interest rates, and even though they do play a role, it's not 100% them. So those are all things that you have to consider when you are thinking about either buying or selling. So yeah, if you have any questions, you can drop them down in the comments. And I have a showing, so I just wanted to make this video real quick, or well, get on live real quick and just talk to you guys and let you guys know what's going on. But yeah, I gotta go.